Okay, good morning and happy Monday, everyone. This is Taylor getting the party started for Monday, April 24th, 2023. What's up, Phil? Good morning, Lorna. Good morning, Mirza. Good morning to Option Seeker. All right, my friends. Well, if you're a trader, and I would imagine all of you here are traders, one of those kinds of, Super Bowl kind of WrestleMania weeks, big tech earnings. So last week we heard from, let me think, who reported last week? Netflix and Tesla. So Netflix, of course, gaps down a bit. And then for Tesla here, a pretty good blow. So they closed the night before earnings around $1.80, and they find themselves going into the weekend down towards 165. So I actually think here with Tesla, this might try to come down towards that 150 and kind of fulfill the prophecy of filling that daily gap. So earnings back here, pretty good gap up. And if you come down and fill it, again, kind of fulfills the prophecy. So Tesla's looking pretty rough. But for this week, folks, we have the stock formerly known as Facebook on the 26th. So 2/6 is Wednesday. So Facebook on Wednesday. Microsoft here on Tuesday. Then you got the big Google. Personally, one of my favorites, Google announces on the 25th. And then you got Amazon on the 27th. And then the following week, you get the big kahuna, Apple. And I want to say Apple is on the 4th of May. And then I believe early May, we're going to have another Fed meeting. So all kinds of potential catalysts coming up here. And what this might just mean, pull up the QQQ here. What this might mean, guys, for the next 1 to 2 to maybe 3 weeks is just more so continuation of the chop. So if you look down on the 4-hour chart here for the NQ, or the QQQ rather, they'll dump it, and then they'll rip it, they'll pop it, then they'll flush it. We're getting a lot of noise here, but we're really not going anywhere. And one observation that we made together last week was ever since, early May, momentum here on your 4-hour chart hasn't been supportive of that continued push higher. Positive crossing momentum, and they pump it, they pump it, they pump it. As soon as momentum breaks, right, you'll notice it doesn't mean we fall apart here. It just means that the initial thrust, right, the easy part of that move, done and over with for now, until they can reload that momentum tank and get that MACD line back above 0. So when that happens on a 15-minute chart, a 30-minute chart, or even a bigger time frame like a 4-hour chart, it's usually the outcome. It could lead to a flush, but best case scenario, it's just some nasty back and forth chop. So now what we're seeing here on the daily chart is a little bit of that negative cross here on your momentum. And then up here on the big 3 indicator, we lost our buy signal. So daily chart going from bullish to neutral. And again, doesn't mean the Qs are going to fall apart. Doesn't mean this is a great shorting opportunity. It's just more so the ebbs and the flows. So fresh tank of gas for the bulls. And they're working it. Momentum goes back under the 0 line. We're kind of dead in the water. They'll flush it, they'll pop it, but the easy part, right, that momentum part of the momentum-driven part of the move, done and over with until fresh cross-side momentum, and we're back to business. So those are a few things I think you want to be mindful of. Structure here is still fine, but you're not going to see a market trend higher just on structure. Guys, if you don't mind, give me like 10 seconds. I got somebody yelling in the kitchen. Be right back. All right, sorry about that. Apparently, I'm going crazy. Nobody in there. But yeah, just things to be mindful of. All right, huge big tech earnings coming up, which, as a general statement, the market's kind of going to be in a standstill until that's done and over with. But then, as far as swing trading the market, breaking momentum means things can get a little bit more difficult. Now, if you look at some of your recent leadership, like the semiconductors, for example, you're seeing the same thing here. So fresh cross, beautiful push higher, negative cross, total chop fest, fresh cross, and you're back to business. So as far as the ebbs and the flows, we're at this part of the ebbing and the flowing. Doesn't mean you have to go and look to short the semis. Doesn't mean the semis are going to fall apart and come back down here and test those lows. It just means until they can repair this and shift momentum back above zero, looking for that big sustainable push can just be a little tough. So SMH, same thing here in NVIDIA, same thing in AMD. And then, like I mentioned, they got earnings, but Meta also getting that negative cross. And even Microsoft here, little negativity on that MACD. So just, again, things to be mindful of. Things that to me suggest until we get through the earnings and then potentially until we get through the Fed, maybe swing trading is going to be a little tough. And then one more thing I want to show you here is the 4-hour squeezes on the SPX and the QQQ. So 4-hour chart of the SPX, 4-hour squeeze back here gets a fresh tank of gas. Right. Big rip higher. This 4-hour squeeze gets a negative cross. So until that can turn the corner and get back above zero, for me, it's kind of tough to think this 4-hour squeeze can do what that 4-hour squeeze did. Back here, momentum is fully supportive of that push higher. All right, momentum says go on ahead, 4-hour squeeze, fire to the upside. Again, doesn't mean it's going to fire short. It's a little bit tired though. So the S&Ps have got the squeezeroo, and then on the Qs here, same thing. And again, momentum here has been negative since, call it early April. Now, the nice thing here about watching these 4-hour squeezes is, eventually when they fire, should result in a pretty decent move, either which way. Now, at the moment, it's kind of a tough read. If I'm trying to get long here, I don't love the fact we're under the 21 EMA. I definitely don't love the fact there's no buy signal. I don't love the fact there's no bullish momentum. But if I'm bearish on the QQQ, well, this has kind of been like the same song and dance. Sitting in the 4-hour squeeze, no momentum. And they can't quite flush it just yet. So keep an eye on those bad boys. When they eventually fire, should lead to a pretty good move. But with all that being said, in the interim, while we're waiting for earnings and all that beautiful stuff, gonna focus on the squeeze scan here, and primarily just kind of live and breathe in the lower time frames for now. So a 2-hour squeeze, a 1-hour squeeze, 30-minute, 15-minute, maybe even a 5-minute. That shall be the focus for now. So we'll do a little work here together. Let's do 2-hour. We'll do a 2-hour squeeze first. All right. I always forget. The scan doesn't like to work before the market opens. We'll try one more time. Yeah. All right, so I'll be back here in the free room later this afternoon, and we'll jump into the scans at that point. But a few here off the top of my head. Like my major focus heading into today is going to be Shopify, actually, as far as these lower time frame squeezes. So for ShopAdopt, Really digging the 2-hour chart here. Really liking that 2-hour squeeze. So squeeze is back here. So there's your first push higher. Right, here's your first back test. And it does a pretty good job of holding support. There's your brand new squeeze. There's your brand new buy signals. And then what I also like here is everything taking place inside that 2-hour squeeze. All right, so you take it down a notch to the 1-hour chart. And it's pretty decent. Right, you would prefer to see, okay, here's the 1-hour chart. Momentum crosses back above zero. We get a buy signal. But structure is good enough. Let's see the 30-minute chart. Now that looks really good. So nested inside of the 2-hour squeeze is a brand new 30-minute squeeze of the buy signal. So that's appealing. The 15-minute has got a squeeze with some buy signals. And then even on your bigger time frames here, you have a daily squeeze with a daily buy signal. So I do like shop from top to down here for a push through $50. And then, like I said, we'll come back here together this afternoon, and then we'll crank up some scans. One thing we can look at though is the radar over here. Okay, yeah, that's the other name I wanted to show you, Google. So last week, the best squeeze that I saw last week, and I didn't trade it for what it's worth, but I sat there watching it. 15-minute squeeze. And off she went. So for today, you've got Google here and the 30-minute squeeze. So Shopify's got a few. Google's got a 30-minute. It's also got a 1-hour. And then let's see if you got a few more here. Utilities got a couple squeezes. If you're into that kind of thing. Let's see. Google again. Yeah, so evidently the utility sector is squeezing itself silly right now. This is actually pretty solid. 1-hour squeeze, 1-hour buy signal, 30-minute combo, 15-minute combo. You even got a 5-minute squeeze to boot. So for me, I'm liking Google and Shopify. And then, like I mentioned, probably a few weeks here of a little bit of patience. Get through Microsoft, get through the Googles, the Metas, the Apples, get through the next Fed meeting, and then, we'll see what's up here, guys. But I do think for now, anchor to your 4-hour squeezes, like as far as your compass for your next directional move. And the best part about that is, like the QQQ, squeeze fails to fire, and it's just a lot of this. Make the necessary adjustments. Like all of last week, we were trying to play for that breakout. And they push it, it comes back in. They push it, it comes back in. So be careful looking for the pop or the flush here until this thing fires. But all right, guys, I'll jump in the chat, see if you got any questions, and then we will roll into the open. I believe I got the open in the gold room. Is usually the case on a Monday. Yep, I do indeed. TD, thoughts on NOW? Pretend earnings isn't in 2 days. I like it for an entry here. Bunch of buy signals, good hold of your 21. Momentum is still in check. But as we know, all of that pretty structure, all the pretty colors, the buy signals, all of that can kind of get tossed out the window during that earnings announcement. So my preference when we're that close, you do one of two things. You wait until earnings is done, and then you revisit the idea, or you just you accept that binary risk. Hey, I think this chart is bullish. I think regardless of earnings, this chart's going to lead into higher prices. So I'm going to buy some cheap out the money calls here and accept the max loss. That's the whole thing about holding through earnings. If holding through earnings blows your account, or you wake up the following morning and there's just all kinds of carnage in your trading account, the unfortunate thing is, well, that was some self-inflicted pain. You put on that big risk going into the binary event. You buy a couple cheap calls. It's kind of harmless either which way. So just be mindful of earnings and then the risk associated with that. But great looking chart there, TD. And then it's kind of the same thing here for Google. Where Google, we said, was what, the 25th. So that's going to be tomorrow. Now, as a general statement, pretend earnings isn't tomorrow. I like the chart here. First push higher, first back test holds, right? Continuation. Here's your next back test, brand new daily squeeze. And then like we saw under the surface here, I think a lot to like on the 30-minute chart. So maybe you come in today, maybe you try to look for a nice pop here, kind of a day trade opportunity, but for a swing trade, I'll see what's up here after earnings. But they're fixing up some of the problems here pretty good. Pretty good. ISRG. You don't tend to do too much with them after they gap up like that after earnings. I don't want to directly quote him because I can't remember exactly the rule of thumb. Maybe Lorna remembers. Lorna, JC's rule of thumb? Like, yeah, something gaps up after earnings, and we tend to trade a little bit higher to sideways for like a week or 2 weeks. Frankly, I don't watch earnings moves too much, but that's the old rule of thumb per JC. They gap it up after earnings, tends to kind of hang in that neighborhood for a bit. Then you look for your gap fill or some continuation. But if you're trying to play the bad boy, you want to operate on your lower time frames, because now you're at the point where buying it at 300 with the willingness to ride it all the way back down to that daily 21 EMA, right, doesn't make too much sense. The structure is still going to be fine, but your options trade, it'll be dead, $30 lower. So now we're kind of at the point where, all right, this is a momentum move. All right, we've already kind of missed the easy part of the move. So we're just trying to milk this thing for whatever it's got left in the tank. And that's where I think you wait for a dip to an hourly 21. Or you look for an hourly squeeze, or you look at something like this, a nice 30-minute chart. All right, they pop it. Little pullback, little consolidation, brand new 30-minute squeeze. Well, your window of opportunity here could be to jump into that 30-minute squeeze. See if they can't fire it to the upside, and you get your piece and you get the heck out of there. It's kind of how I would look at that one. Yeah, Matt, I think it's a really good probability. I assume you're talking about the 4-hour squeeze, right? Yeah, it's pretty likely. This feels like a market waiting on something. It's a nasty version of it, but that's kind of what it is, right? All right, the bears are going to take it down to support. And down at support, they're going to print the sell signal on every time frame. Right, so they got every loaded gun in the world, and we can't break support. Right, not enough sellers. Not enough selling pressure, not enough panic here to actually break that range. And then here comes the bulls, and they're locked and loaded. They got buy signals, they got squeezes, and just can't quite crack through. So feels like a market waiting on something. that's something that might be big tech earnings. But yeah, the second part of your question, probabilities wise, I guess here's how I would look at it. Probabilities wise, I would tend to think the 4-hour squeeze has a much better chance of firing to the upside if momentum can cross back above zero. So if earnings can do that, right, and whether it be Meta or Google or Microsoft, whichever one, if earnings can do that for the QQQ, or refill the gas tank here on the 4-hour chart, then I think you see the squeeze fire to the upside. If earnings comes out, it's kind of a non-event, then I do think more often a squeeze with negative momentum, probabilities-wise, has a better chance of firing short. And with these, simple indicators, to me, that's kind of the beauty of it. When you go back, you study your charts, you're not going to find too many 4-hour squeezes that fire long and lead to a nice, big, sustainable push with negative momentum. Doesn't tend to happen too often. So, hey, maybe it happens this time around, but that fresh cross back above zero, to me, would suggest, okay, they want to take it long. So until then, my friends, we are on standby. We are on standby. But all right, y'all, I will let you go here. For those of you in the options room, I will see you in about 10 minutes, and we'll keep the party going. And then for the rest of you here, like I mentioned, I'll be back in the free room today at 2 p.m. Eastern, 1 p.m. Central. So for any of you not in the free room, definitely come on ahead and check it out. Just head over to the website, and you should find a link for the free room somewhere on the homepage. And, come on over and hang out. I'm in there a couple times per week. You got Cody in there. Henry makes a couple appearances, I believe, and the rest of the gang as well. But all right, my friends, have a great day. Trade well. Let's make it a good week. And I will see, hopefully, most of you in the options room here in a few minutes. Adios.